Often our financial lives are not only driven by what we do, but also by what we do not do. In this video, you'll learn what's killing your financial success. From poor investment decisions to poor financial habits, we'll share tips and strategies to help you avoid these mistakes and move toward financial wellness. You'll get concrete steps to financial freedom. Ready? Then let's get started. Don't forget to subscribe to our channel and click the bell. Let's get into the financial mistakes to avoid right after the commercial break. $1,000 for registration. Is it real? Yes, if you register on Bybit. Bybit is the best platform for investing and trading digital assets. The link is in the description, and here we go. Chapter 1: Mistakes in Budgeting. Mistakes that get in the way of getting out to your financial freedom. 1. Improper planning. Undefined, unclear goals and lack of a plan can cause you to lose control of your budget. 2. Misallocation of expenses. Allocating funds without prioritizing and addressing urgent needs can exhaust the budget. 3. Lack of reserve. Not having an emergency fund for unexpected expenses can create financial problems. 4. Ignoring debts. Not accounting for debts and interest on loans can lead to the accumulation of a debt hole. 5. Unplanned expenses. Not accounting for the need for regular mandatory payments and taxes can lead to financial trouble. 6. Unmanaged petty expenses. Small daily expenses can accumulate and are easy to overlook. 7. Illusion of cutting expenses. Trying to cut all expenses at once can be ineffective and even destructive. 8. Failing to account for inflation. Failing to account for rising prices of goods and services can be fatal to the budget in the long run. Avoid these mistakes, develop your budget thoroughly and plan your finances carefully for financial success. Chapter 2: Mistakes in Investing. Mistakes that prevent proper and profitable investing. 1. Lack of investment plan. Starting to invest without a clear plan and goals can lead to unwise decisions and loss of funds. 2. Lack of research. Investors often do not take enough time to research the assets they are investing in. This can lead to poor decisions. 3. Panic selling. Reacting to short-term market fluctuations by panic selling assets can result in the loss of potential profits. 4. Undiversification. Investors who focus on only one asset or asset class expose themselves to increased risk. Diversification helps to reduce risk. 5. Ignoring risks. Failure to consider potential risks and develop risk management strategies can lead to unexpected losses. 6. Short-term thinking. Expecting instant results often leads to poor investment decisions. Successful investments take time. 7. Investing in something you don't understand. Investors who invest in assets they don't understand may be putting themselves at greater risk. 8. Trading too often. Excessive market activity, such as frequent buying and selling, can increase commission costs and reduce returns. 9. Ignoring taxes. Failure to account for tax liabilities can reduce the real return on investment. 10. Not accounting for inflation. Not accounting for inflation means that the real value of your funds decreases over time. 11. Imitating the crowd. Investing in assets just because they are popular can be dangerous. Popularity can change quickly. Avoid these investment mistakes, strategize, seek professional advice, and learn from your mistakes to achieve financial success. Chapter 3: General Tips for Avoiding Financial Mistakes and Getting to Financial Freedom. Avoiding financial mistakes and achieving financial success requires responsibility, planning, and education. Here are some guidelines to help you avoid mistakes and move toward financial wellness. 1. Make a budget and stick to it. Create a budget that includes all of your income and expenses. Track your finances and stick to the budget. 2. Set goals. Set specific financial goals, both short-term, buying a car, and long-term, retirement. Goals will help guide you. 3. Research investments. If you are going to invest, research the assets you plan to invest in. Education reduces risk. Diversify your portfolio. Spread your investments among different assets to reduce risk. 5. Risk management. Develop risk management strategies to minimize your investment losses. 6. Build an emergency fund. Save for unexpected expenses to avoid debt. 7. Debt reduction. Develop a debt reduction plan and stick to it. High interest on debts can be very damaging to your financial well-being. 8. Learn to manage your emotions. Don't make investment decisions under the influence of emotion. A long-term strategy is usually more successful than reacting to short-term market fluctuations. 9. Take advantage of tax breaks. Explore tax opportunities and use them to your advantage. 10. Keep learning. financial markets and regulations can change. Constantly update your knowledge and adjust to new conditions. 11. Invest in yourself. Investing in education and skills development can be the most profitable. Develop yourself as a professional and an individual. 12. Plan for retirement early. Start saving for retirement as early as possible to ensure financial security for the future. Following these tips will help you avoid common financial mistakes and move closer to financial success. Remember, financial success takes time and patience, but it is doable with proper planning and discipline. Chapter 4, Summarizing. It is important to realize that financial success is not achieved instantly, but is the result of good decisions and perseverance over time. In our video, we looked at the most common mistakes that can prevent you from achieving financial wellness. Avoid poor budgeting, improper investing, lack of financial goals, and other common mistakes. Instead, develop a clear financial plan, keep your goals in mind, and continually educate yourself. Remember that even if you've made financial mistakes in the past, it's not a judgment call. Today is a great time to start moving toward financial success. Constantly evolve, learn from your mistakes, and stick to sound financial principles. Financial success is a goal that can be achieved with the right approach and perseverance. Never give up.